We know today's shoppers love online shopping and the convenience of big box stores. But are they still drawn to the independent natural product stores? Find out in today's webinar based on data from the 2015 Whole Foods Magazine Retailer Survey. Welcome and thank you so much for joining us today. I'm Kaylynn Chiarello-Ebner, editor and associate publisher of Whole Foods Magazine.
And I'm Jay Jacobowitz, founder and president of Retail Insights. I'm also the merchandising editor at Whole Foods Magazine.
Today we're going to review our top 5 most interesting findings from the 2015 Whole Foods Magazine Retailer Survey, and we're going to give you some bonus analysis about what the data mean for your business. But before proceeding, let's have Jay go over a couple of housekeeping notes.
We'd love to get your questions and comments during the presentation, and we'll try to answer as many as time allows at the end of the webinar. To ask a question, all you have to do is type your comments in this panel right here, where it says questions, and then hit send. If for some reason the panel disappears during the presentation, just click this orange arrow and it will pop up again. If you miss anything during the presentation, we will email you a recorded copy. It will also be available next week on WholeFoodsMagazine.com.
Okay, so let's get started. Let's quickly talk about our 2015 data set, which is reflective of the July 1st, 2014 through June 30th, 2015 survey period. The data was originally published in the December 2015 issue of Whole Foods Magazine, which is available at WholeFoodsMagazine.com. For 38 years, Whole Foods Magazine has surveyed U.S. independent natural product stores about their sales, profits, and expenditures. 2015 respondents were located all over the country and in all population areas. Stores' average age was 25 years, and 20 of those were under the present owner.
Now remember, these numbers only encompass independent natural products retailers. For a broader view of the entire landscape of natural products retailing in all 8 channels of retail distribution, we will also present at the end of this webinar the 2016 Retail Insights Retail Universe for premium natural, organic food, supplement, and personal care sales. Now, back to the Whole Foods numbers.
So when we talk about the 2015 Whole Foods Retailer Survey data, you'll hear us frame the analysis in terms of how much perishable foods a store sells. Whole Foods Magazine feels that perishables, like refrigerated, frozen, fresh produce, and prepared foods, are absolutely the strongest magnets for bringing shoppers in on a daily basis. Sure, supplements bring people in on a monthly basis when your bottle's empty, but shoppers are more likely to bring in weekly or even daily transactions when they're looking for pre-made deli items or even produce for a homemade meal. So the percentage of perishable foods a store sells is strongly linked to its size, overall sales, and profits. So we think this is a really helpful framework for understanding our survey data.
Stores got anywhere from 0 fresh perishable foods to more than 55% perishable foods, and that is, by the way, of overall sales. So again, this is how we broke out the survey respondents. By the way, Austin, Texas-based supernatural chain Whole Foods Market gets about 70% of its sales from fresh perishables foods. Basically anything that needs refrigeration, the bakery, the deli, fresh fish, meats, and your regular refrigerated dairy items and freezer case. It's easy to think perhaps of the low perishable stores, those that get 0 to 9% of their sales from perishables, as supplement-focused stores, the sort of typical heavy weighted supplement store. And the high perishable stores really as thinking about those as true culinary destinations. All told, the 2015 survey numbers, respondents reached 1.06 billion in gross sales and represent more than 1.7 million square feet of gross lease area. By the way, this survey represents 10% of the entire $10 billion in independent natural products retailer universe. We're pretty proud of that.
So let's talk about finding number one, sales growth in 2015. Now here's a roundup of some of our overall averages. You can see that stores averaged about $2.7 million each in annual sales and had net profits of over $124,000 per store. I personally thought it was really interesting that these numbers beat what we collected for last year's survey pool. So sales grew 3.4%, gross profit was up 3.2%, and net profit was up 7%. So sales were up this year across all perishables focused stores, except for the 10 to 19% perishables group, which we'll talk about in a little bit. And by the way, we should really highlight the 20 to 34% perishables group. This year, their annual sales were above the mean of all stores, and last year was below. And this group, in fact, had 27% more sales than we saw them have last year, which is a larger spike than any other group. So you hear people ask all the time, can independent stores survive in a world where Amazon, Walmart, and Target dominate? Well, I think the answer is clearly yes, according to our data. Not only are they surviving, but many are thriving.
Kaylynn, I think it's really worth emphasizing the point that what we saw in this 20 to 34% group, the growth really that they had, 27%, is really spectacular. And it shows the traction that retailers can get when they reach critical mass in perishables, which we estimate probably occurs somewhere around 30% of sales.
Right. Now, stores that sold the most perishables in the 55% plus group also had the most sales at $13.9 million in 2015. Smaller shops, and they tended to be the supplements-focused businesses with fewer than 5 locations, had annual sales of just over $578,000 in 2015. So you can see from these figures how really diverse our survey pool is and how really diverse the whole natural independent landscape really is. And illustrating this wide spread of respondents is the store size. So the average 2015 store footprint was 4,434 square feet, and that's the gross lease area. The average retail area was 3,353 square feet.
Speaking of diversity, let's get to finding number 2. More perishables means more sales. The one exception to this was, again, the 10 to 19% perishables group. You'll notice that they, at $852,000 worth of sales, actually sold less in gross sales than vitamin-focused stores, the next unit up, 0 to 9% perishables with, stay there, thanks. Kaylynn, can we go back to that previous slide? Thanks. The 0 to 9% perishables with more than 5 locations sold $1.1 million in sales. So you'd think that a store that sold more perishables in the 10 to 19% group might outstrip those, but in fact it was not the case. We'll talk more later on as we move through about the 10 to 19% group. As the percentage of perishable sales increased, so did the footprints of the stores. If you look at this, there really is a linear relationship, again, with the exception of the 10 to 19% group. At 2,263 square feet, they were actually smaller than the vitamin chain stores, which had 2,484 square feet. I think this is a telltale sign that these 10 to 19% stores are really vitamin stores that have half-heartedly bolted on some fresh foods. Now, putting sales per square foot into the mix, this year the average sales per square foot of gross lease area, and that is everything out to the walls, everything you pay rent on, was $616 per square foot. The average of the selling area, retail square foot, was $814. You'll notice that sales per square foot increase as the percentage of perishables grows, all again except in the 10 to 19% perishables group. There's a little dip there. They're a little less efficient. Focusing on the opposite ends of the spectrum, we again see that sales by square foot were more than 3 times higher at perishables-focused stores than they were at supplements-focused stores. As the percentage of perishable sales declined, so did sales per square foot. The other store type that experienced growth in this area was the small to medium-sized natural grocers with 20 to 34% perishables. Their sales per retailing square foot grew 15% this year and bumped up nearly 13% this year. Now, you may remember we spoke about this group earlier with 27% overall top-line revenue increase. The reason that you're seeing smaller percentages per square foot is that they actually increase their square footage from year to year.
And now for finding number 3, more foot traffic. So we saw a bump in overall sales in 2015, which is great news. But it wasn't because shoppers were buying a lot more at the register. The average transaction was more or less the same as we saw last year at $31.68 per basket. Rather, average foot traffic increased from 203 shoppers per day in 2014 to 218 customers per day in 2015. And certain store types saw an even bigger spike in traffic. So take the 20 to 34% perishables range. It went from 245 customers per day in 2014 to 305 daily shoppers in 2015. And if you look closely at this chart, you will see that there's really a break here between the perishable stores on the top half of the graph and sort of the supplements focused stores on the bottom. And that actually includes the 10 to 19% perishables group. So the bottom 3 sort of cluster around about 100 customers per day or less. And those on the top have more than triple that at 305. And that's probably because those on the bottom just haven't translated to shoppers that they are daily shopping destinations. They're sort of more the monthly stock up supplement destinations versus the next higher group, the 20 to 34% perishables group that has triple, like we said, of the bottom group. And they've clearly translated to shoppers, come in every day, we have great offerings for you on a daily basis. Now check out one group up, the 35 to 54% perishables group. They had 555 customers per day. And that was up from last year, which had only 480. So that's 16% growth, pretty nice. Unfortunately, we did see the 10 to 19% group lose a little ground. They lost about 5% of their daily shoppers, and they were at 92 customers per day. And this count, like we said, is the lowest of all groups that have perishables offerings. Now let's zero in on this group a little bit, the 10 to 19%. So perhaps the problem here is that they just don't offer enough perishables to clearly signal to shoppers that they are daily or weekly food trip destinations. So, like we said, they're probably shoppers are more thinking of them as supplement stock-up shops. After all, 51% of their sales come from dietary supplements, and that's only about $432,000. So if we look at their neighbor, one group up, you'll see that they have more than double that from a dollar perspective at $950,000 per year. Also, you can look at the mix of the 10 to 19% group, what they've chose to focus on in the perishables area. They are zeroed in on refrigerated and frozen foods and have very little focus actually on produce and prepared foods. And these two areas, the prepared and produce, are the ones that are more apt to bring in your daily shoppers. And the larger perishable stores with the bigger footprint and the manpower to focus on these areas are well aware of it. They certainly focus on produce and prepared foods to bring in shoppers on a daily basis. And as a consequence, these areas have a much larger percentage of their overall sales. So just look here at the 20 to 34% perishables group. They bring in 7.8% of their sales from produce and just over 6% from prepared foods. And if we go one level up here to the 35 to 54% perishables group, they do even more business in these areas with 17% from produce and almost 11% from prepared foods. And combined, that's nearly $2 million in sales from these two categories alone. So at the end of the day, the 10 to 19% group is probably just not operating strategically. There's sort of supplement stores that are backing into perishables. And as a result, unfortunately, both areas are kind of suffering. So it might be time for them to reevaluate their store mix and make some changes.
We've talked about sales. Now it's time to talk about profit with our finding number 4. This year, average gross profit margin for all stores was 37.6%. That's pretty healthy. While this was about the same as what we saw in 2014, the actual dollar amount grew to an average gross profit of just over $1 million, $1.026 million. Profits by dollar amount varied widely. The highest dollar gross profit came from the 55+% perishables group at $5.4 million in gross profit. The lowest gross profit by dollar came from the 0 to 9% perishables group. Again, think about these as vitamin-focused stores. And this was the group that had 1 to 5 stores, so just your single store operator, at $234,000, though their gross profit margin percentage was one of the highest at 40.5%. That kind of makes sense because they don't have the expensive labor in the prepared foods and perishables departments. Net profit increased in 2015. The average net profit for all stores was $124,000, which was 4.5% of all sales. Overall, stores with the smallest net profit percentage were on the higher range of dollar net profit, which means essentially if you're a big perishable store, you're bringing down maybe 2 or 3% to the bottom line, but that's a bigger number because you're driving such a high top line. Supplement stores had the highest net profit percentage, again, but tended to be lower in terms of dollar amount. That's because their gross revenues are much, much smaller than the perishables-focused stores. On a dollar basis, the 10 to 19% perishables group was the least profitable of all the perishable-oriented stores, and even had profits that were less than the supplement chains.
So before moving to finding number 5, I think it's worth running through where stores spent their largest share of earnings, which was inventory. Inventory was clearly the biggest expenditure. They spent about $1.7 million in inventory this year, and wholesale inventory costs were about 62% of their total sales. And the average annual inventory turns for all stores was 11.44, and that's, right about once per month. So inventory spending varied a whole lot by store type. The supplements-focused stores with 5 or fewer locations spent just over $340,000. And if you look up at the 55+% perishables group, they spent more than $8.5 million on inventory. Now, those figures as a percentage of sales weren't that far apart, interestingly, though. It was 59.5% for the supplement stores, the small supplement stores, and 61.4% of sales for the large grocers at the top. But neither of these percentages reached some of the spending of the mid-size perishable stores, like the 35 to 54% group and the 20 to 34% group. They spent about 65% and 63% respectively. So this kind of reflects the slightly stronger buying power of the largest perishables stores.
And now for finding number 5, the Retail Insights Retail Universe. Our 2016 Retail Universe reflects the data from the latest quarter, generally the third quarter of 2015 for public companies, plus our Retail Insights field estimates of revenue and growth for non-public companies in all 8 channels of distribution, from mass market and club stores to conventional grocers and pharmacies to specialty retailers, large and small. Overall, natural products ripped ahead by more than $9 billion to total $72.4 billion, a 14.9% increase from the $63 billion we saw a year ago. The Retail Insights universe is currently tracking 111,662 stores that sell natural organic products in 8 retail distribution channels. The breakout channel this year was conventional supermarkets, which added $3.7 billion in natural organic sales for a 39.6% year-over-year increase. This is one of the reasons that supernaturals like WholeFoods Market are seeing lower comps and same-store sales. Nevertheless, the supernatural channel, which includes WholeFoods Market, Sprouts, and others, tacked on a healthy $2.4 billion or 13.4% increase year over year. Next in growth were the club stores and mass merchandisers. Each of these channels added over $1 billion in natural organic sales and grew nearly 30% year over year. Compact grocers like Trader Joe's and Natural Grocers by Vitamin Cottage, we call them compact grocers because their stores are 20,000 square feet or less, grew just over 2%, adding $250 million in sales. And independent retailers, like those that participated in WholeFoods Magazine's annual survey, grew just over 4%, adding $426 million. For market share, supernaturals continue to lead the pack with nearly 29% market share of all natural organic sales. Conventional supermarkets jumped into second place this year with 18.14% market share. Independents and compact grocers are virtually tied at just under 15% market share each, with the rest of the pack, the other 4 channels of distribution, falling in at around mid-single-digit market shares. To wrap up, natural organic sales now make up 11.39% or $72 billion of the $635 billion in total food store sales, jumping more than a full percentage point from 10.23% a year ago. The average natural sales per gross lease area square foot is $573, and the 126 million square feet of space dedicated to natural products make up just over 4% of the 3 billion total square footage of grocery stores throughout the country in all 8 channels. This suggests that natural organic products are several times more productive per square foot than conventional groceries are. Overall, the 111,662 retail units that Retail Insights tracks this year averaged $648,000 in sales from 1,131 gross lease area equivalent square feet dedicated to natural products. At this point, Kaylynn, do you have some questions for us?
Yeah, actually, we have some really good ones. So attendees, we're going to launch into some of the questions that you've asked today and some of them that were asked ahead of time. Please go ahead and ask your questions now in the questions panel. We're going to try to get to as many as we can. So Jay, why don't you take the first question? Someone would like to know, what sort of promotions work best in stores? Coupons, shelf talkers, what are you thinking?
Well, with the millennial generation, 92 million strong, and that compares to the baby boom generation, which has just 77 million. And the millennials coming into their peak earning years, you have to believe as a manufacturer trying to market through a retail channel that mobile communications have the nod in terms of a preferred promotional tool. Yes, manufacturers should provide in-store tools such as shelf talkers and neck tags. Whatever you can get into the hands of the retailers to execute for you. But honestly, at the point of purchase, nothing beats demonstrating fresh, delicious foods, and nothing works as well as a well-merchandised end cap with good lighting, smartly faced product, attractive pricing, and clear signage. And for this, as retailers know, you need that special breed of employee, a true merchandiser.
Right. Thanks, Jay. Let's see. Okay, so someone is asking, what is the short-term and long-term outlook on our industry? So I think I can take this one. Short-term and long-term, and I'm basing this off of numbers that we've collected not only this year, but the past several years for our survey. I think that we can continue to see some really heavy competition from those big players interested in branching out to what this industry has to offer in terms of health and wellness, specifically the natural and organic products. And they have definitely noticed that shoppers, whether they're millennials or boomers, are really interested in what this industry has to offer. Now, we really can't leave out Gen Z. Now, those are the younger group of quote-unquote shoppers. They're about to graduate high school now, the oldest. And they've really grown up, many of them, with organic in their homes. Their parents were turned on to organic and natural products when they were young. And so as they enter the workforce and have money to spend, they're really influencing dollars as well. Now, unfortunately, I think this might take a toll on some smaller retailers that are still trying to work out how to differentiate themselves. Maybe some of those are in the difficult 10 to 19% perishable group that we've talked a lot about. But the good news is that as years go by and even as competition stiffens and unfortunately some of the weaker retailers move on, I really think this industry is left with an even stronger pool of core retailers that are supported by super dedicated shoppers. So short and long term, looking at our data, I really think that sales and profit are going to remain steady and even show some healthy growth in the years to come. Let's see, I'm just looking through some of the next questions. Okay, Jay, someone has asked, my store is probably in the 10 to 19% perishables group, and I'm a little depressed right now. So, is there anything I can do? This person would like to know.
Sure. Great question. And my heart goes out to anyone who is in this 10 to 19% group. And of course, statistically, this is not a death warrant. I actually have talked to quite a few people who have 10 to 19% perishable sales, and they're doing quite fine. Of course, everything depends on your trade area, your competitive profile, and how well you come to market as a retailer. But by and large, this 10 to 19% group had good growth. As Kaylynn said from the survey, the average age of the store is 25 years. If you go back 25 years, we're really looking at 1990. Well, 1990, think back then, Whole Foods was executing its roll-up strategy and buying the most significant independent retailers around the country. The sales were growing rapidly, and the supermarkets hadn't yet really taken a bite out of the specialty channel, so that the natural independent channel and supernatural channel really had the lion's share of the business. So what happened was typically you'd have your 1,000 square foot store, and the landlord came to you and said, you know what, your sales are growing 15% a year. Would you like the 1,000 square feet next door? And the retailer said yes. And well, what are we going to do with that space? Well, let's put in a juice bar, or let's add a little bit of produce or what have you. And I think that really is what has happened when we see the numbers, because there is produce and prepared foods, but it's 1 or 2% of sales. So At the time, it may have been okay in the 1990s, but as we moved into the 2000s and supermarkets began to wake up and more supernatural competitors came on the scene, it really became clear that having just a little bit of perishables in a footprint that really isn't going to be on the radar screen of everyday food shoppers and people looking to buy food for dinner. I think that's where we find the 10 to 19% group now. So what's the solution? Well, you need to take a look at yourself and how much time you feel and energy you feel you have left to drive this thing forward. It really is a life cycle question, because certainly it's absolutely clear that natural organic products are going to continue to grow. We're seeing that in the burgeoning distribution in all 8 channels, and so the name of the game really is the ante has been upped. You're going to need to invest money, you're going to need to invest time, and you're probably going to need to put that into capital expenditures to expand your footprint, to add equipment, to add departments, and so forth. And frankly, you may not have the stomach for that, and that's understandable. But there really is no shortcut. You sort of can't take the existing footprint and cram something else in there and expect massive change. It's just not likely to occur. The good news is, I think that if you have a strong balance sheet and a strong profit and loss, and you're a profitable store, you may be able to find somebody to invest along with you and maybe take it to the next level.
So Jay, if I could just ask you a quick follow-up question to that. Can you go the opposite way? What about stores that might consider taking perishables out completely and becoming a supplements-focused stores? Is there strength there?
Well, I tell you what, you reduce risk in one sense because you probably be giving back square footage and you'll be leasing a smaller area. And of course, vitamin E and CoQ10 and omega-3 is more profitable than a head of lettuce. So in that sense, you're lowering risk and increasing the profit of each sale. But again, as you pointed out, Kaylynn, in the survey, what happens then is you become a 30-day shopping cycle versus a once or twice a week shopping cycle. So there is a danger there, and of course the internet is looming over all of this. And so again, I think it does come down to your particular trade area, how much competition you have. If you happen to be in one of the B minus, C plus trade areas that hasn't yet seen a lot of competition, well, maybe you like your chances and can go ahead and do that. I think if you do that, what you really have to do is you can't just be a general I've got vitamins and supplement store. You have to focus on what your strengths are. You have to identify what those are. Maybe it's homeopathics, maybe it's botanicals, whatever it is, wherever you're most comfortable. Maybe it's the broadest selection of hard to find products. Maybe you have some letters after your name and you can get some of the practitioner brands in your store that aren't available everywhere. You have to have some kind of edge if you're going to do that.
Right, okay. So as we wrap up, I'm just thinking that it might be worth mentioning that we've actually offered some interesting real-world examples based on these data. Jay actually covered it last month for us in the March issue. Do you want to talk a little about that, Jay?
Yeah, and actually, that's coming up actually next month, the month coming up, March, my column, the Merchandising Insights column. What happened was, as a result of people seeing the survey outcome in December, said, well, how does this actually break down on a department by department basis? Can we actually create a store? So what I did in the March issue of Merchandising Insights, which will be published shortly in the WholeFoods Magazine, and it'll be available online, is we built a sample store, taking it department by department. And the very interesting thing is that you get to see what the different labor costs are associated with each of the departments, and it's quite a striking difference. Labor costs run anywhere from the high single digits to the mid double digits. It's a little scary as you get into the prepared foods departments. But we've gone ahead and extrapolated it out so you can see what the inventory is, what the gross profit margin is, and what you're bringing down to your operating profit line. So it's a very interesting column, and I hope you'll seek out the magazine when the March issue publishes.
Right, that should be available online next week. We've got another interesting question here. If you are a vitamin-focused store, approximately 50%, what percentage would you decrease it to reap the benefits of daily shoppers and perishables?
I'm not sure I understand the question. Could you read it through again, please?
Sure. If you are a vitamin-focused store, approximately 50%, what percentage would you decrease it to reap the benefits of daily shoppers and perishables?
I guess that's looking through the wrong end of the spyglass. I don't want to decrease my absolute dollars of vitamin sales. What I want to do is increase my perishable sales in other departments. So what we see going back into the survey, the answer actually exists in the Whole Foods survey. If you go back in and you look at the percentage of sales for supplements of the perishables groups, it gets smaller and smaller as a percentage of total revenues, down to 8 or 10% of sales from, say, 50% as you give us in your example. But the absolute dollars that relates to, they're driving millions of dollars in supplement sales. So the sweet spot, or the secret sauce is, or the pixie dust, is to add perishables departments, prepared foods departments, and so forth that really make your store a culinary destination, that there's something interesting about it, there's a good menu, great flavors, well executed, and very attractive. And of course, that does require more space, so it's not just a simple question of reducing the percentage of vitamin sales. That will happen of its own accord, and I don't think there's a magic percentage that is. It really will be a reflection of how strong other areas of the store become.
Great. Thanks, Jay. All right. I think at this point we are ready to close out today's seminar. Thank you so much, everyone, for joining us today. Check out the recording next week on our website, WholeFoodsMagazine.com, and have a great afternoon.
Bye now.